All right, let's get right into it. The billion-dollar question that every single crypto investor is wrestling with right now is, when will this Bitcoin bull run actually top out? We've got all these new players, huge money coming in, and everyone is saying this time is different. But is it? That's what we're going to investigate. So, our whole investigation really kicks off with this fascinating question from crypto investor Duce Lee. He asks, what if the Bitcoin cycle isn't just a bunch of random market data? What if it's something more predictable, almost like a ritual? That one thought right there, it sets the stage for everything we're about to unpack. And this leads us right to the heart of the problem for investors this cycle. You've got this tug of war happening. On one side, you have these historical patterns that have worked like an absolute charm. On the other, you have these massive new forces, like the Bitcoin ETFs. It really makes you wonder, who's actually running the show here? To get to the bottom of this, we're going to break it down into three competing theories. Is the cycle top all about hitting a certain price? Is it purely about timing and the calendar? Or is it something else? A kind of predictable, almost scripted ritual that just plays out every 4 years? Okay, so let's dive into the first two big ideas. These are the classic ways people have tried to call the top of the bull run in the past. So the price-driven logic is pretty simple. It says the market tops out when greed just hits its absolute peak and there's no new money left to keep pushing the price up. Timing isn't the main thing, it's all about momentum. But then you have the timing-driven logic, which argues it's all about the 4-year halving cycle. The top shows up when the cycle hits a certain point of psychological maturity, which is usually about 12 to 18 months after the halving. But here's where it gets really interesting. When you actually look back at the history, one thing becomes crystal clear. Timing has been way more consistent than price. Seriously, trying to guess the exact top price has always been a crapshoot, but the timing of the top, well, that's followed a pattern that's almost spooky. It really suggests that crowd psychology is the most powerful driver of all. Now, we have to talk about the elephant in the room, the Bitcoin ETFs. This is the #1 argument for why this cycle is going to break the mold. But how exactly could they change the game? Well, on one side, you have the argument that all this constant buying from institutions through the ETFs will smooth everything out. Less crazy volatility, which could lead to a longer, more drawn-out cycle. But the counter-argument is pretty strong, too. At the end of the day, human behavior is still human behavior. Fear and greed are what drive markets, and even the big institutions trade in cycles to lock in their profits. And this brings us to what he calls the ritual cycle. This theory suggests that the cycle isn't just random market noise. No, it's actually following a predictable script that just keeps repeating. So the ritual theory basically says that these key patterns, like, say, a weak September, followed by a crazy manic run-up in the fourth quarter, happen so reliably that the big players now just expect it. They play along with the script because it's the most profitable move, before they eventually pull the rug. Okay, so we've got our theories: price, timing, ritual. But what does the hard data actually tell us? Let's switch gears and look at the evidence to see if this whole ritual thing holds any water. Let's just start with the raw numbers. Simple as that. We're looking at the first 3 completed cycles here. You can see the date of each halving. That's the event that really kicks off the bull run. And then the exact date that the price hit its all-time high. Now, when you take that data and plot it on a timeline, wow. A really stunning pattern just jumps out at you. Cycle 1 topped in December. Cycle 2, also December. Cycle 3, November. Every single blow-off top has landed right smack in the fourth quarter. And it gets even more specific if you count the days between the halving and the peak. The last 2 cycles are ridiculously close. They hit their all-time highs 520 and 540 days after the halving. I mean, that is an incredibly tight and consistent window. It's almost like clockwork. So what does all this tell us about the cycle we're in right now? Well, if we just take that same 540-day playbook and apply it to our halving back in April 2024, it points to a potential top right around October 12th, 2025. And if we assume the cycle might drag on a little longer, like it has in the past, a 580-day window puts us at November 21st, 2025, deep into Q4. Okay, we've looked at the theories, we've gone through the historical data. And this brings every single investor to the exact same difficult crossroads. Do you trust the news and the constant narrative that this time is different, or do you trust the traditional script? And man, as Duce Lee points out, this decision is not easy. He says news will manipulate you to do stupid things, and he is so right. But he's also honest that cashing out is a very emotional thing as well. Nobody wants to sell too early, but nobody wants to be the last one holding the bag. So, for just a second, let's ignore all the noise. The news, the hype, everything. Let's just look at the script. What has it told us so far? Well, it tells us that tradition is undefeated. 2013, 2017, and 2021. A perfect 3-for-3 record. Every single cycle top has landed in Q4. The historical script has been the most reliable guide we've ever had. It has worked every single time, without fail. So the only real question left for this cycle is whether the same old authors are writing this story or if someone new is holding the pen. And that's something every investor has to decide for themselves.